Welcome to the Valareso Capital community, where we discuss the stock market and trading strategies to become a consistently profitable trader and investor. Hey traders, welcome back to Valareso Capital. On today's video, we're going to go through the market update and we're also going to take a look at the weekly watch list. Remember guys that this video is for informational purposes only, is based just on my personal opinion and is not financial advice. So let's start where we ended up in last week's video. So let me just grab my drawing tools here and jump to the chart of the VIX. So the main theme of last week's video was actually the VIX. Remember guys that we were talking, and let me make myself a little bit smaller here. Remember guys that we were talking about this breakout that happened on Friday on the VIX. We were talking about the possibility of the VIX running all the way to this 25 area right here. And that was basically due to the thesis that the SPX will continue to trade to the downside. Remember that we were talking about 4,150 as a possible level of support. What actually ended happening, and we're going to take a look at that chart, is that the SPX came even lower than the expected move that we had for last week. We ended up testing the 4,100 level, and those 50 points are actually a considerable move in the SPX. But what I find really interesting is that we actually had a divergence here in the VIX. You can see that the VIX did not make a higher high while the SPX was making a lower low. Now, is that important? It could be important and it could not be important. But what I can tell you is that I have seen this happening many other times where when we have a divergence in the VIX, that tends to suggest that we're probably at least going to see a short-term bottom in the markets and then perhaps a tradable rally to the upside like the ones we already had in these past few months. So we're going to take a look at that. We're going to take a look at some oversold levels in the SPX, and then of course we're going to take a look at some possible resistance levels if we happen to see that bounce in the SPX. So remember guys, to subscribe to the channel. If you find any value on the information that I'm sharing, remember to subscribe. That way more people can find this channel and also use this information for their advantage. So let's just jump here into the chart of the SPX. Now that we already have the VIX checked, let's go to my favorite chart, which is the SPX. So we were talking about this 4,150 level as a possible level of support, and remember that we were talking that as a possible level of support because we had the previous resistance level and breakout level in the SPX. So you can see right here, if we just zoom out here a little bit, you can see that we had this cup and handle setup. Of course, we had the breakout, and we were talking about this level acting as a possible level of support in the market. You can see that we actually came lower below that level, which was something a lot of people were not expecting, and I was not expecting that. But now we are at a very important level of support, and that's going to be the 4,100 level. We of course also have a gap of support right here, and now the question is if this gap is going to hold. Now, I don't think that we have to take a look at this level as a fixed level, but mostly like a zone. I think that this zone can extend all the way to 4,080. So somewhere around right here, you can see that we also have another gap support. So somewhere around this area, I think that the market will try to build a little base before we find a short-term bottom and then perhaps a rally. And I'm going to show you some previous instances when we had this. You can see right here that we were extended to -3 ATR in the Keltner channels, and you can also see that in the previous sell-off that we had. And now you can see that we are also back at that -3 ATR level. Now the question here is very simple. A lot of people are thinking, is this a correction or a bear market? It doesn't really matter. What matters is creating a roadmap for next week. And basically that roadmap is telling us, hey, the market is really oversold. We are at extreme levels, and the probability of an snapback rally to some levels of resistance is higher than a continuation to the downside. Now, we could still see a continuation to the downside, but we are starting to see that these oversold levels are visible not only in the chart patterns, but also here in my momentum indicator. So when we have these oversold levels, if you are short, it makes sense to start trailing your stops. And it also makes sense to start looking for some setups that might actually benefit for a snapback rally or a tradable bounce in the markets, whatever you want to call it. So let's just jump here. And what will be the target for the SPX? It's actually pretty simple. You see this 200 daily moving average right here. Then this moving average is going to be a possible target that I'm going to be expecting as a possible level of resistance if we happen to see a bounce in the markets. And then somewhere around this level, then perhaps we're going to form a little base before continuing to the upside if that's what the market decides doing. But of course, the path of least resistance continues to be to the downside, so any rally into that level of resistance is going to be susceptible for further selling and a continuation to the downside. We just have to understand that for now, the path of least resistance continue to be to the downside, but we also have to understand that the market is reaching some levels in which we could see that a tradable rally into those levels of resistance. So that's basically going to be it for the SPX. And now let's take a look at at another chart that we were actually talking about, and that's going to be the Nasdaq Composite. Then I just want to take a quick look at the IWM. So let's jump into the Nasdaq Composite here, and let's take a look at the one that I have drawings on. So remember, guys, that we were talking about this 200 daily moving average as a possible level of support in the Nasdaq Composite. We of course, as you can see, we are trading below that, but we are already at a gap support, potential support for the Nasdaq Composite. And then of course, we have our clear levels of resistance, which will be somewhere around this 13,000 level, and that coincides with the wave that we have right here. So any move to that level, then perhaps it's going to be a possible level of resistance. And now if I want to speculate here, I would think that maybe what we are going to see in the Nasdaq Composite is a little bit move here to the upside, then perhaps a little bit of a pullback, and then probably we're going to see this 200 daily moving average come into here. And then of course, perhaps if the market wants to turn, then we are going to hold that 200 daily moving average and then have a continuation to the upside. That's a possible scenario that you can watch if we're having. I have seen that pattern before, but of course, if the market just wants to continue lower, we're going to rise here and then just continue to the downside. So you have to be open to both scenarios if they happen. And then finally, let's just jump into the IWM. And what is really interesting in the IWM is that we actually undercutted this level right here. You can see that we had these very important lows. We undercutted that level on Friday. And now the question is, if we happen to see a very strong continuation to the upside, all the people who shorted here in the hole, we can call it the hole because it's really extended to the downside, all those people are going to be trapped, and we can see a very, very aggressive short covering rally that probably is going to take us further than this 170 level, but of course this 170 level is going to be the first target in the IWM. But of course we have to be open to all different scenarios. Now let's just jump into the weekly watch list. I do have some really nice names that I'm going to be watching for next week. So let's jump here first into the first name that I have, and this is one that I executed on Friday. I just have a very, very small position. Microsoft is a name that does not have a really high ADR level, meaning that it's not that volatile. And I started somewhere around with a 10% position here, so it's actually pretty low risk. I'm using this low right here as my stop level. What I like about Microsoft is that, of course, we have this gap up on earnings, and now as the market was coming into some possible levels of support, you can see that Microsoft continues to hold these moving averages here. We continue to trade above that 50 daily moving average, and then of course you can see that my momentum indicator is also at support, and we of course have a squeeze. So what I'm thinking here is that if the market rallies, then perhaps Microsoft can give it another try right here into the gap, and that will be my short-term target for a swing trade in Microsoft. So that's one that I'm executing, and that's actually my only position that I have right now in my portfolio. So really low exposure. I have basically 90% cash, but I'm looking to deploy that cash if we happen to have a scenario that the one that I described on the SPX. And these are the names that I'm going to be watching. So the potential setups, bullish setups for next week, it's going to be PDD, Netflix, Spotify, Now, and Roblox. In this video, I'm going to cover PDD and Netflix. So let's jump here into PDD. This is actually my second favorite setup after Microsoft, and this one is looking just fantastic. I did have a really nice trade on PDD from this level right here into this resistance level right here, and I'm looking to get back again into PDD. I do have an alert. Let me show you my alert. I do have an alert right here, somewhere around 175, which will be basically a retest of these anchor VWAP that we have right here, and that will also be a retest of that gap support that we have in PDD. That will be an amazing entry for a possible continuation higher into this level of resistance, somewhere around 116. So pretty easy setup. You can have a stop if you get to execute this setup somewhere around here, then your stop can be below that gap support, and that will give you a really nice risk reward, somewhere around 2 to 3 risk reward. So that will be actually pretty amazing. And then the next one is going to be Netflix. And Netflix is also looking pretty nice. Remember that we had this very strong downtrend in Netflix, right? You can see the move that we have after we break those very important levels of support, those moving averages. Netflix came all the way down. We had earnings, and you don't need to know the numbers on earnings. You don't need to know anything about it. The only thing you need to know is that the reaction to those earnings was actually pretty bullish. And now you can see that Netflix has this huge gap to the upside. We continue to hold this gap for now, at least. And we have to assume that Netflix will want to keep those lows here. So any entry somewhere around this level will give you a really nice risk reward. You can set your stop somewhere below the wave right here, and then perhaps looking for an extension to that 3 ATR level to the upside, somewhere around 425 to 430. I think that will be a pretty nice target, somewhere around this resistance area right here, and that will be the trade that I will be looking for Netflix. So that's basically it for the video, guys. Just in a summary, I'm looking for that 4,100 level in the SPX to hold, at least in the short term, looking for a potential tradable rally to the upside. And then when we are at levels of resistance, somewhere around 4,250, then perhaps we will have to reassess the market and see what are the stocks telling us and what is sentiment telling us, and all those amazing things that we have to look at the market. So once again, thank you so much, guys, for watching. Have an amazing weekend, and I will see you next week. Take care, and bye-bye.